Welcome back. This is Good Morning Namibia. Eos Capital is a Namibian private equity firm with a decade-long track record driving inclusive economic growth through investment in high-impact sectors, including agriculture, infrastructure, and renewable energy. The firm is celebrating their 10-year anniversary in October 2025, reflecting on a decade of growth, impact, and investment. Joining me in studio with the details, Mr. Zach Kauraisa, Head of Advisory from Eos Advisory Pty Limited. Good morning, sir, and welcome to Good Morning Namibia.
Good morning. Thank you for having me.
How are you doing?
I'm doing really well. Life is good.
Yeah.
How are you?
I'm doing very well too, thank you. Life is indeed good.
Yes.
Yeah. For those not familiar with Eos Capital and Eos Advisory, please tell us more about these entities and please tell us more about the role that you're playing at these entities.
Happy to do that. So as you said in your introduction, Eos Capital is a Namibian private equity investor. Been doing it for around 10 years and invested just over $1 billion Namibian across sectors in infrastructure, agri, tourism, manufacturing, education, you name it. We probably have invested in there over the last decade. And going through that investment process, we picked up a lot of learnings about Namibian projects, what the country needs and the challenges businesses have getting off the ground. Especially from that investor perspective. And taking those learnings, we saw an opportunity to help more businesses get through our investment process or any investment process. And that was really the idea behind Eos Advisory, which is to take these insights from an investor perspective, hold the hand of many companies, and help them problem solve and prepare so that they have a much higher probability of raising capital from players like us or others. And my job is heading Eos Advisory and really working with these businesses hand in hand and bringing those insights into the Namibian market.
Thank you for that overview. I would imagine that you would want to keep some of your cards close to your chest, particularly if those relate to transactions that are still in the making. But are there any specific transactions that you were involved in lately that you'd like to highlight at this juncture?
Absolutely. I mean, a lot of our focus nowadays has been in the mining sector just because of the opportunities that sit there across gold, copper, tin, manganese. More recently, we did some work out in Zambia and closed a facility for a Zambian tin mine with a Singapore-based commodity trader that invested capital there. And now we're working with a Namibia-based manganese mine to close around 100 million financing facility with some German capital. So a lot of what we're doing, again, is bringing international capital into the Southern African region. And a lot of what we've been doing lately is in the mining sector.
For those of us on the periphery, the term close might be ambiguous.
Yeah.
What does it mean within the context of equity and investments?
Thank you for asking that. So close essentially just means we got the transaction done. The documents were signed, money was transferred, and everyone is happy to kind of proceed on. So that's what close means in this
The deal
context.
was clinched.
Yes.
The entity wasn't closed.
No, not at all.
Yeah. It is our understanding that you also recently launched a second infrastructure fund. Would you like to speak to us about that, please?
Absolutely. So Eos Capital has 4 funds right now. Historically 3. One of them was an infrastructure fund with 500 million Namibian dollars that we've deployed into the energy sector, telecommunications sector, and student accommodation sector. And that has been performing exceptionally. And off the back of the need for infrastructure in Namibia and the success of those investments, we have opened up a second infrastructure fund that we're targeting over 2 billion Namibian dollars for as a raise that we'll be looking to deploy within Namibia and hopefully within the region as well, within this theme of local infrastructure with regional impact, especially when you think about connecting landlocked countries to the port of Walvis Bay, for example. Then sometimes you may need to invest across the border in order to unlock opportunities within the borders. And so that's a lot of what we're doing with the second infrastructure fund. And next year, we hope to have a lot of announcements with regards to our activities there.
You earlier explained to us how Eos Advisory had come into being based on the challenges that businesses face in raising capital and how you fulfill that role. And you also heading, of course, that division. Which are the key challenges that business do face as far as inter alia raising capital is concerned?
No issue. I think we'll say there are about 3 main issues that we've identified and that we help businesses solve on a day-to-day basis. The first one, well, let's call it financial analysis. I think it's easy for us to fall into a trap as business owners to say, we've done 100 million in revenue for the last 3 years, we'll do 100 million for the next 10 years. And there's obviously financial analysis that businesses are very competent in executing for themselves. But we found there's often a gap between what a sponsor or business owner may think is required and what investors want to see in order to have comfort that a business will close, as we said a moment ago, close the transaction. So a lot of what we come in is do financial modeling, do 10-year projections of business performance that take into consideration every financial line item, quite a complex and rigorous process to really get certainty about future performance of that business. So that's financial analysis. On a secondary basis is due diligence. So a lot of the times when businesses are raising capital, the first time they encounter due diligence is halfway through a transaction process. Red flags are identified, and sometimes those things either delay a transaction or end a transaction.
So there will be no closing.
Exactly.
Yeah. And
so,
rightfully so, I would imagine.
Rightfully so, because investors don't like to take too much risk. And so a lot of what we do at the start of an engagement is do a due diligence ourselves on that business, identify the red flags, the issues, and then spend a few weeks or months holding that business owner's hand and problem solving, creating risk mitigation plans and structures to make sure that once a third party does their own due diligence, issues have already been solved, they've already been identified and addressed from an investor perspective that we bring. And then on a third perspective, lastly, I'll say is network. So a lot of the times when businesses are raising capital, they'll reach out to the 30 or 40 potential financiers they have within their network. But because Eos Capital has been in this game, so to speak, for over a decade, we have investor networks across the region, in North America, Europe, Australia. So where a business owner may reach out to 30 or 40 potential investors, will reach out to 300 or 400 because we have over 1,000 in our databases. And so that level of scale turns a raising capital process that could have taken 2 years, that can bring it down to 3-6 months, simply because you have much broader access. So those are really the three issues we look at.
2026 is around the corner.
Yes.
Which are the opportunities that you see in terms of the investment landscape of this country?
I think 2026 is an exciting year. I think 2025 has already been exciting. I don't think it'll be surprising to anyone to hear the buzzwords being thrown around oil and gas, green hydrogen, mining sector, et cetera, right? There's a lot of foreign investment dollars flowing into Namibia, which is an incredible thing. One of the themes we have identified globally is that investment dollars have been looking for bigger and bigger projects, bigger and bigger investments. And Namibia is still quite a fragmented market with a lot of medium-sized businesses operating. And so sometimes there is this gap where a renewable energy financier wants a 50-megawatt project, and Namibia has a lot of 5 and 10-megawatt projects. And so the major opportunity we see is consolidation. It is the willingness of several medium-scale players to combine their businesses to compete with international companies and dominate their markets. If you look at even oil and gas, and you're looking at these ancillary services like drilling services, when you're looking at the contracts that are issued out there and who they go to, a lot of the times it is international players, simply because individual Namibian players don't have the capacity or the capability to deliver at the same scale. But if you put 3 or 4 of those businesses together, all of a sudden they can. And a lot of that investment, a lot of that value can be retained. And that's across sectors. So consolidation, I see, is the next theme in the investment landscape that will really unlock a lot of value.
Thank you for your time. Thank you for those comprehensive insights, and happy birthday to you and Eos.
Thank you very much.